So you would have seen a couple of weeks ago the government's latest budget came out and they're pretty proud of it. We've heard Scott Morrison and Matthias Cowan telling us they've got a 23.9% of GDP tax speed limit that they're not going to go over. Spending growth is just 1.9% in real terms, which is the lowest of any government in 50 years, they tell us. And they tell us that they're going to be cutting taxes. They're going to be cutting business tax, they're going to be cutting income tax. But when we actually look at the budget's own figures, this is the biggest tax, biggest spend, biggest debt budget in Australia's history. Now, for context, before the Whitlam government got its hands on the nation's coffers in 1972, tax as a percentage of GDP was just 16.9%. Real taxes per capita were under $6,000 a year, the budget was in surplus and net debt was negative. Just 4 years later, taxes had climbed to 21% of GDP. Spending grew by an astonishing 20% of GDP, 20% in real terms in 1974 and 16% the following year. The budget went into deficit and debt blew out. Ever since then, the size of government, the extent of taxation and the level of spending has continued to grow almost without exception. By 2021, taxes are expected to reach 24% of GDP. This is slightly lower than what happened during the Howard years because of the commodity boom, but it is still a long way from the pre-Whitlam excesses. And when we take into account state and local governments, plus superannuation, over 40% of income is now going to tax. And all of this is happening under a coalition government. It's hard to imagine how much worse things are going to get when Labor get back in power. When we talk about tax reform, we usually talk about it in technical terms. And we know that all taxes destroy wealth, that all taxes are essentially theft, but that some taxes are more destructive of wealth and prosperity than others. Australia has a very high reliance on the corporate tax, which is the most destructive of all taxes levied by the federal government. Even the Gillard government's review of tax found the so-called marginal excess burden of corporate tax is 40%, meaning that every dollar raised with the corporate tax destroys economic value at 40 cents. Yet in 2015, the Australian government take of business tax was 4.3% of GDP, close to double that of the OECD average. And corporate tax as a percentage of total tax is the highest in the OECD at 15.3%, compared with just 8% for the OECD average. We also have a very high reliance on a so-called progressive income tax. This is the second most destructive federal tax. But we have a low reliance on the GST, which is one of the least bad taxes, although the butchered implementation means it's far worse than what it should be. Making compositional changes to the tax system, increasing our reliance on the GST and reducing our reliance on income and corporate tax would be a very good thing. So too must we restructure the broken GST system. Under current arrangements, the GST is a mechanism for low-performing states with bad economic policy to be bailed out by high-performing states with good economic policy. Western Australia is effectively paying South Australia to blow up its coal plants and expose itself to the whims of the wind and sun, seeing it have the highest electricity prices in the world. Instead, states should be able to implement their own GST and keep whatever they raise, rather than being decided by some opaque bureaucratic modelling. If the GST is really a state tax, then let states deal with it. But it's also important to have a goal. I think a modest goal is for taxes as a percentage of GDP to go back to the pre-Whitlam rate of 16.9%. This is a fairly modest proposal and much better than the Treasurer's much vaunted 23.9% tax speed limit, which is never going to be implemented anyway. The question is, how do we get there? The only way to cut taxes permanently is to cut spending permanently. Spending is tax. Every dollar of spending is a dollar of tax. That tax can be paid for today or deferred into the future with the accumulation of government debt. So really, cutting taxes today without cutting spending is not really cutting taxes at all. It's just deferring those tax payments into the future. And that means today's young people will have to foot the bill. Debt today is over $560 billion. The interest bill alone on debt is $18 billion a year, $1.5 billion a month, or $375 million a week. All up, this means $560 billion in extra taxes are going to be levied sometime in the future. Any budget which raises spending and any budget which raises debt is also raising tax. And the government claims it's cutting taxes. Well, at least they're trying to reduce the corporate rate and they want to abolish the 37% income tax threshold. These are good ideas, but they're being deferred way into the future. The corporate tax cuts weren't slated to come in until 26-27, and the income tax cuts not until 24-25. Either you believe in lower taxes or you don't. And the reason taxes are growing is because spending is growing. Even the government's own budget shows every year over the forward estimates, spending in real terms per capita, controlling for population growth, controlling for inflation, is rising by about 4.5% over a 4-year period. The question we have to answer is, how do we cut spending? I'm a fan of very simple rules, and I think every government department should reduce spending by 1% per year over the next 4 years. A very simple rule, a very modest proposal, nothing too radical there. If we did this, the budget would be in surplus within 1 year. By 21-22, debt would be $326 billion instead of $580 billion. Still too high, but getting better. This would then start to provide room for the government to implement permanent and sustainable tax cuts and to move us toward the pre-Whitlam rate of 16.9%. I see no reason why each department can't tighten its belt by 1%. Start with the pay and the generous superannuation provisions that bureaucrats get. Then reduce the number of bureaucrats, sell off the AVC, devolve education to the states, and abolish the Human Rights Commission, and we're almost there. But I think this gets to an even more important fundamental question that we have to get better at communicating, which is, why do we want lower taxes? We know that lower taxes will encourage more business investment, which is going to create jobs. We know that lower taxes will increase economic growth, and we know that lower taxes will increase take-home pay. But I think an even more important element of lower taxes, and why they're so important, is because they encourage earned success. We know that people flourish when they earn their own success. It's not just the money per se, which is a measure, not a source of this earned success. Getting more money after a certain point isn't really what gets people going. It is earning the money that makes them happier. That's why we know that a paycheck and a welfare check, even if they're worth the same amount of money, aren't equivalent. A paycheck is earned success, while a welfare check is its opposite. It's learned helplessness. It teaches people that good or bad things that happen aren't a product of their own agency or their own actions, but things that are randomly bestowed upon them and they can't do anything about. This is why the goal of our political system should be to give all Australians the greatest opportunity possible to succeed on the basis of their own hard work and merit. Allowing people to keep as much fruit of their labour as possible isn't just an economic necessity, it's a moral imperative. And higher taxes actively discourage earned success. This is particularly pernicious for those on a low income. When they seek to move up the income scale, take a pay rise, get a better job, acquire better skills, they lose a greater share of their money, as well as losing government benefits. So they have a high effective marginal tax rate. A Treasury paper from not long ago found that the effective marginal tax rate is as high as 80% for someone on around $10,000 or $15,000. It's almost as if there is a plot by the government to deny low-income people the dignity of work and to keep poor people poor. Of course, the same people who call for high taxes then blame capitalism for exploitation and keeping these poor people poor. But nothing could be further from the truth. We know that low and flat income taxes encourage upward economic mobility. And low business taxes encourage business investment, which will allow more people to experience the dignity of work and an opportunity to earn their own success. Getting taxes back down to the pre-Whitlam levels is a modest proposal, which can be attained by just a 1% reduction each year for 4 years right across the government, right across all government portfolios and departments. And I think this is much more sensible and a much more ambitious goal than the much vaunted 23.9% tax speed limit. Thank you.
All right, thank you, Daniel. All right. Next, Simon Cowan. He is the Research Fellow at the Center for Independent Studies. Expertise in welfare and retirement income policy, government budgets, and regulation. Numerous publications as well, so please be sure to check those out at CIS. And let's see here. Simon, thank you for coming up to talk about fairness, right?
Awesome. Thank you very much. Thanks for turning up today. This is my 5th go here at the Friedman conference of 6. I did miss the first one, but I've done all the rest of them since then, and it seems to be getting better each year. Look, just a little bit about who we are and who I am. I'm the head of the research team at the Centre for Independent Studies. We've been around for 40 years. We're a classical liberal think tank, believe in small government, lower taxes. But we also believe in civil society and allowing people to make their own choices. And I think, you know, one of the things that's important when we're talking here about tax and welfare, and there's always a tendency to get really wonkish in these discussions and bring a PowerPoint with hundreds of slides that have all this data in it. And I actually think that that's the wrong way to go about welfare reform. And it's one of the reasons why the current approach that we've taken to trying to reform welfare, focusing on things like dole bludgers, focusing on the numbers and the growth, pointing out that welfare grows by $20 billion each year, has comprehensively failed. So we've had very, very little success in restraining growth in the welfare state. We have managed to keep the cost of unemployment benefits relatively low, and we have stopped some of the expanses that we've seen in Europe and elsewhere around social insurance. But more or less everything else that we've tried to do has failed, which is why, as Daniel was pointing out, the growth in taxation. Taxation has been driven by an increase in spending, and that increase in spending has been driven by three things. It's been driven by an increase in welfare spending, education spending, and health spending. So if the current approach has failed, what can we do differently, and what should we look at? And I think we really actually need to go back to the first principles here and ask, what is the purpose of welfare? Now, I don't mean that in the sense of, well, why the hell do we have a welfare system? But understanding why welfare payments exist is actually really important when you want to talk about how we can change the system rather than just try and stunt the growth. And a good starting point here, the government commissioned Patrick McClure to do a report that looked at the welfare system. I mean, the government hamstrung that report by not including fast-growing payments like the pension, but they did start to look at what are the core values of the welfare system. And McClure said they are supporting people to participate both economically and socially, building capability through skills and training, treating all Australians with respect and dignity, providing equity across the welfare system, and ensuring a basic standard of living for income support recipients. Now, with all due respect to Mr. McClure, that's just crap, right? It's just crap. At the end of the day, welfare comes down to two competing concepts. It basically comes down to a competition between need and fairness. And if you want to phrase that differently, it really is actually poverty and inequality. The problem with our welfare system and the welfare systems across the Western world is that there are too many payments that are aimed at remedying inequality and too few that are aimed at remedying need. And of course, the second problem is the baby boomers. Now, the baby boomers are not technically to blame for the cradle-to-grave welfare state, but they are in fact undoubtedly the reason why it exists. Because at each point in the development of the baby boomer generation, we've seen either the creation of a new entitlement or the massive expansion of an existing one. So up until 1946 and the referendum for the Commonwealth to take over welfare payments, the payments are generally pretty small. The age pension rose at times, but it also fell, not only in real terms, but in nominal terms. And the means test was quite strict. But from 1946 on, this starts to change. In 1950, the child endowment, which is a non-means tested payment, is expanded to cover all children. It's extended again in 1964 to cover students up to the age of 21, just as the baby boomer generation starts to leave it. In 1973, the single mother benefit is created when boomers are 27 and under, their prime age to receive it. And of course, if you look at the comparison of unemployment benefits to pensions in 1973, they're actually on parity. Right now, there's an $8,000 difference between New Start and the age pension. And of course, 1974, Whitlam abolishes university fees. In 1976, the family allowance is converted to a broader family payment that goes to people rather than just that one-off payment. In the 80s and 90s, Hawke expands family benefits and rent assistance. Howard does the same thing in the 90s, and we see an increase in benefits paid to families with teenage kids. Now, who is it that might have teenage kids in the 1990s? Of course, Keating creates superannuation in 93, but it's Costello who removes the taxation treatment of it in 2006, when the baby boomer generation are 41 to 60. And of course, Costello creates the transition to retirement provisions and removes benefit limits, things that are already starting to be wound back as the boomers move into retirement. And of course, with the boomers now aged 51 to 70, Australia has the most generous pension scheme that we have ever seen, with benchmarking locked in across the future with spending growth for years. Now, the only thing that gives us a bit of hope here is that this is not the only trend. Once we see boomers start to leave payments, they invariably get tightened a little bit. So free university ends as boomers leave university, family payments get cut, or at least they're trying to cut them, as boomer families move out. Unemployment payments start to diverge from the age pension. And of course, now that superannuation, boomers are moving into retirement, superannuation starts looking at getting tightened for those of us who are still in work. Now, of course, this is all a bit tongue-in-cheek, right? But the answer to this problem is that this is all about votes. And welfare, largely, is something about votes. Now, votes are politics, right? And that leads us to one of the important concepts that we're seeing in welfare, and one of the big problems I see, and the arguments to why things need to get bigger all the time, right? And that's the idea of public goods. Welfare is not a public good. It actually can't be a public good. Now, it can provide a public benefit, but economically, it can't be a public good. And that distinction and that error is actually not an accidental one. Now, public goods have a couple of characteristics from an economic perspective, right? But the two main ones are that they're non-excludable, so you can't stop people from using them, say national defence, and they're non-rivalrous, which means that if someone uses it, it doesn't stop someone else from using it as well. The public provision of those goods is seen to be the norm because of those two characteristics. Because it's not easy to stop people using them if they don't pay, and it's hard to charge people to use them when everyone can use them and there's no diminishing benefit. So we have this idea that welfare, which doesn't meet those two characteristics, it actually meets neither of them, right, is a public good that needs to be paid for through taxation, rather than a private benefit that is paid for through fees or use of access. Now, there's a technical term as to what this actually is, right? And education's a good example, but it's called a positive externality. Now, an externality arises when the benefit accrues to an individual, but there's a spillover benefit that arises for the public. So education provides an overwhelming benefit to the person who's being educated, but there's also a benefit that accrues to society. It's a positive externality. But the thing about positive externalities is that you don't actually have to compensate people for generating that benefit. Public goods are paid for through taxation. They're provided for everyone. But if you're providing a benefit to an individual person, you don't have to compensate them for benefits that accrue to society as well. And this concept comes through so much of what we see. And the two things that I want to touch on next. The first is childcare. So childcare will be, before the end of this decade, a $10 billion a year program. The benefits to society from providing $10 billion a year in childcare really haven't been demonstrated in any meaningful sense. But the things that are driving that cost are pretty clear. Government credentialism. You now have to have a qualification to wipe people's noses and to wipe kids' butts. You're only allowed to have so many kids in your centre per staff member. There is no limit on the number of kids a family can have at home, right? But if you want to look after children, you've got to have 1 to 4 in the ratio. The big problem with this, of course, aside from the absurdity of all this, is that $10 billion a year isn't actually leading to lower fees or costs or more availability for parents. If anything, they're reporting that these problems are getting worse. This government intervention is providing no benefit to parents. It's providing, at best, a marginal benefit for most kids. but I'll tell you who it is providing a huge benefit for: the people who want to run childcare centres. Now, there's another example of this as well, and it brings back to that earlier theme when we're talking about the difference between need and inequality, and that's maternity leave. So paid maternity leave costs about $2 billion a year. And unlike a lot of other government programs, it's actually been evaluated. And here's what the evaluation found. So it increases the number of women who are taking 18 weeks off after birth from 78% to 85%. It has no impact whatsoever on the number of women who are taking 26 weeks off. 11,000 households see a change in behaviour as a result of this payment, but the payment goes to something like 10 times that number. At best, $200 million of that $2 billion payment is useful in changing people's behaviour. The rest of it just goes to people who are doing the same thing they would have done anyway. Now, when we get right down to what we're talking about here, we actually need to have a better definition of poverty and need, because we end up in these debates about whether or not something is fair, whether a payment is fair, whether it's fair to give women money to take time off work, whether it's fair to give single mothers more benefits for childcare. The point is not whether or not it's fair. The point is who needs the payments the most. If we had an adequate measure of who was actually poor, we could have a debate about who needs benefits. Unfortunately, we have a much better sense of who is rich, so we talk about who we can tax more rather than who is poor and who should be given more support. I think when we talk about welfare and when we talk about how we restrain the welfare state, we need to stop talking about people who are bludgeoning on the dole, we need to stop talking about unemployment benefits, and we need to start asking the questions much more simply. Who needs support? Who actually needs taxpayer support? Not who do we think is worthy, not who is a deserving person, not who is the latest minority group that we want to support. It's as simple as this. Do you need government support, yes or no? Because I think if you refocus welfare on need and you started to talk about who actually needs more support and who needs less, we'd end up with a welfare system that costs a lot less than we see today. Thank you.
Simon, thank you. All right, and last but not least, Samuel Lee. He is the founder of the Atlas Chartered Accounts. 15 years of experience in business services, taxation, and external audits. Specialized in auditing startups and family tax groups, and how to navigate regs and tax or regulations and tax law. Also a delight to have at parties. And yes, Samuel Lee, thank you so much.
Thank you very much for allowing me to speak here. I guess the best way I thought to express and put everything in context and apply it to the real world is to, I guess, tell you about my life and what I have experienced. Yeah, so right now I am a chartered accountant, and I advise taxpayers, both individuals, companies, trusts, and super funds. But what you need to know is how I got here. I grew up on welfare, but my parents told me that growing up on welfare myself was a shameful thing to do. You can do it if, say, you are down on your luck, you lost your job, but not as a lifestyle choice. And I think that is most common in many Asian families that have a strong family tradition and values. And from there, from the age of 14, I looked for my first job. And it was incredibly hard to do. I was overweight, I had a speech impediment, I hated speaking to new people, so something like this is very scary for me. But after being rejected from 4 employers, I found one employer he was willing to give me a chance, and he said, I will hire you if I pay you below the minimum wage. At that point, I thought I was grateful. I wasn't angry. I wasn't spiteful. I was grateful for that opportunity. And then for the next 12 months, I worked very hard. I was their best employee. I had 12 months worth of experience, work experience, and then I moved on to a better job, a higher paying job. With a regulation, with the welfare system right now, it actually discourages work. Okay, if an employer likes you, but your skills or your abilities does not match the minimum wage, they won't hire you. And believe it or not, businesses, many of them, are not in a position to give out a charity. Okay, and the ones that are very rare. So there are a lot of Australians who may not have a disability, but maybe the education system have failed them. There are a lot of Aboriginal kids who finish their education and they still can't read and they can't count. When they go to an employer, their skills are below the minimum wage. Name one business that would hire a person who cannot read and write or count. Can you name one? So we have a prime example is the Aboriginal community. Only a difference that I can see is the family unit. Yeah, with the Asians and somewhat white families, they have a strong family values, and therefore they see education as a way out or a way forward, and then they impose those values on their kids, right? So they are up in the morning and they pack the lunches, they send them to school, they drive them to school, but you don't see that in the Aboriginal community. The governments spend billions of dollars on education, extra on schools where there are a lot of Aboriginal kids. But they're not turning up because the parents aren't awake in the morning to pack their lunches, to address them and make sure that they get to school. That is a concern in which I think that a lot of people here, well, not only here, but in government, cannot seem to make a connection here. Okay, they see that Aboriginals aren't being hired, and they all automatically assume that it's a racism. A businessman does not. They are least likely to be racist. All they care about is, are you going to make me money? Are you going to be a problem for me? Will I have to fire you and then you take me to court for unfair dismissal and then pay you $10,000 go away money? That is what an employer thinks in their head whenever they meet a new employee. Okay, and they don't have time to meet 1,000 applicants. They can only meet 5. Yeah. So this disconnect with actual reality, with business people who have a common sense and business sense, okay? A lot of these politicians and the government cannot seem to understand, or they don't know the unintended consequences of a law that may be good on paper, but the actual economic and the business consequence or their reactions is quite different. I'll give you examples right now. Through the grapevine and through past clients, tell me if you think, 1, is it wrong? And 2, is it illegal? Yeah? So the government passes a law that that prevents discrimination against an employee in the hiring practices based on race, religion, and gender. Okay, but if that law is unfair, it is uneconomical, or it doesn't make sense, a business will hire a lawyer or an accountant to find a way around it legally. Yeah, I'll give you an example. Through the grapevine about 5 years ago, someone told me about a story about a major bank. I don't know the bank, but they had concerns about. Actually, I don't know if it was a bank or not, but it was a fairly big company. They were concerned about Muslim employees. It is illegal to discriminate against a Muslim, right? So they found a way around it. So they asked one question. We need you to be at your desk between 9 and 5. Is there any reason why you won't be able to do that? And a Muslim would think about it and go, well, as a Muslim, I have to pray 5 times a day. So, no. So the employer goes, okay, thank you for your time. Don't call us, we'll call you. It's wrong. Is it illegal? Businessmen and lawyers and accountants find a way around the law legally, and they do it very well. So these laws that come out, I'm thinking, if it's not economical, we'll find a way around it. So all of these people who can't find a job now, who won't hire them, do you think that they will be just on welfare and that's it? No. They will get their welfare benefits and find a way to earn more money off the books without any problem. Yes? Welfare cheats? It happens. As a person who grew up on welfare, my mother was one of the honest ones, but she had a lot of friends that weren't. And they would find ways to game the system, and they did it very well. And Centrelink and the ATO had no idea. Maybe there was one person who was a little bit stupid and got caught. Then they told them how they did it. And then maybe the ATO and Centrelink changed the way that they monitor and control. But other than that, it is very hard to do. Have a look at a tax right now. If you guys succeed in reducing the tax rate and reducing the complexity of the tax code, I am out of the job. My job is to reduce the tax rate and navigate through the tax loopholes. That's my job. So I have a vested interest in you guys all failing. And so up here, I am stating that there is a better way because I've been there. Yeah? And that is a variant on, I think, one of my fellow speakers have already spoken on, and that is, it is the fair tax in the US, which is pretty much the abolition of the income tax, both personally and for companies, getting rid of the payroll tax, so it's not based on income because you can lie and cheat if it's based on that, but based purely on a consumption tax. So you raise the GST from, say, a 10% to a 23%. I think that was the rate in which they said when it was proposed by Hockey years ago as being a revenue neutral. So and because everyone spends, everyone is taxed at 23%. So if you earn $100,000 a year, you worked for it. At the current system, why does the government take their first cut? The PAYG system, you earn the money, but before the money is given to you, the government takes their first cut. Is that fair? I think not. They didn't do anything for it, right? Then from there, if there is no income tax, you don't have to lodge a tax return for the rest of your life. Isn't that better? Isn't that more simple? I believe the regulation and to comply, I'm guessing the majority of that is tax, $176 billion. Where could that go? Hiring more people? Expanding operations? Instead of paying a person like me so that you can keep more of your own money. Yeah? You could hire 100 people. That's 100 people off welfare, right there. Yeah? There is a better way. And I believe that the current problems that we are having now is the system itself. If we change the way that we get tax revenue and help people find reasons to get a job instead of why shouldn't they get a job, then that would be a much better future to have. All right, thank you.